So while the metric for measuring whether you're successful at investing in real estate can be relative, the idea behind, or the premise for which somebody would be tagged or labeled or considered a successful real estate investor would depend on how much it is that they're able to make, how much it is that their assets have been able to generate for them, and how long it is that these assets are able to work for them. In building a property portfolio that you will consider an investment, you are going to have to strike a balance between your short-term goals, your medium-term goals, and your long-term goals. And to be successful at that and to be able to do that properly, you are going to have to do market research. Market research is going to be that one thing that you're able to do and infuse into your investment strategy that is going to be able to highlight the exact places, types, and strategies or models that you're going to have to put together to be able to build a viable portfolio for yourself. My name is Lerato Lekena-Okoro. I'm a property broker based in Lagos, Nigeria, and I teach you how to build and create wealth for yourself, for your legacy, for your future generations, such that you will be proud of it. So today I'm going to talk about 4 factors that you must consider or you must key into when you're going to do your market research for your investment portfolio. And number 1 is market trends and conditions. In a video that I did earlier this year, I talked about the trends of the real estate market, but today we're not necessarily going to talk about all of those trends, but we're going to look at what trend is it that is applicable to you. Now, if you're an investor who's either starting or you want to upscale or you want to get back into the real estate investment market, then what you're going to have to look for in the immediate at the time. And I always say that if you're going to do your investment and you want to do some research, do it just before you get in. 3 months, 6 months is still a safe period in which it is that you can get this done. Why? Because the real estate market doesn't change too fast or too quickly. However, there may be instances that you may want to consider when you're going to think about whether something is going to be modified or something is going to shift a little or anything. However, 3 to 6 months I feel is a safe time, and it has worked so far. But again, don't hold a caution and always consider all the indices. But let's get back right into the discussion around market trends and conditions. What is it that people need right now? What is it that people are going to need in the next 2 years? What is it that people are going to need in the next 5 to 10 years? These are things that you can look into to be able to decide or define or, fill up your list in terms of your short, medium, or long-term goals for investing in property. Now, if we're going to talk about what is it that people want right now, don't think about what is it they want. Think about what is it that the market or people that you want to serve in the market need right now. There's a growing need right now for young people who need a place to stay, people who don't necessarily want the big houses. And this is why every time there's going to be the 1, the 2, or even the studio flats come out into the market, that most of the time these things go out of the market and they cannot fulfill the demand. And these properties need to be in areas that are either in, around, or close to what is existing, not necessarily the futuristic. So if you're someone who is looking for cash flow, you're looking for cash flow that you can almost start using or generating right now, that is going to be a trend that would apply to you. If you're going to consider what is it that people would want or need in the next 2 years, then you start to look at places that people are going to. So you see what is happening. You're looking at places that people need now for you to be able to get into the market right now. And therefore, medium term, you're looking at where is it that people are going to that is already grown or is already habitable or is already functional. And then that's what's going to guide where it is that you're going. This will be for people who are thinking much more long term and they're not really keen on being able to earn or yield much right now. Then you would be looking long term. And this also applies for people who want to be able to quadruple or even look for assets that they can pass forward to the future generation. Then they would be looking at things for the longer term, 5 to 10 years. Where is it? What are the chances of development going into a certain place? Things are starting to happen in a certain area, and you're going to start looking, okay, in 5 to 10 years, where's the demand going to be? Or where can the demand be? And then that would always help you to be able to understand how the trends are going to give you the answers of where it is that you need to start investing in, or you need to be invested in, or it is that you need to look to invest in. So that's number one. And number two is going to be location analysis. Now, one thing that is very prominent with a lot of the real estate market that you are definitely seeing right now is the fact that, oh, this location is growing, this location is this location is that, and all of that. I mean, and all of that is true. However, how is the location growing? Is the location growing in such a way that it is going to be tenable, it's going to be plausible, it's going to be efficient for the people that you want to serve? I keep talking about and referring to the people that you want to serve because first and foremost, you are not investing in real estate for bricks, inanimate things, or whatever it is. You are investing in real estate for people to use it. So people would always be the topmost factor for which every other thing that you're going to be researching would have to factor in for. And the better it is that you can define the people that you want to be able to serve, the better it is that you're going to be able to hold down on all the other factors that you're researching. For example, if you want to cater to young families, people who are maybe newly married, they have young kids, then you know that what you need to be looking out for would be locations that either have supermarkets or have grocery stores or have markets or have mini schools, daycare centers, play centers, hospitals in or around them, so that you will be able to understand that, yes, these places are in high demand right now. Places that are very close, easily accessible. These are places that people would naturally want to go and live in. So those would always factor into how developed that it is that location. If a location is upcoming, then one of the things that you want to definitely look out for is how easy has access to this place. Does the place start to look like a place that people or other businesses would start to go and set up? So that the people who then want to live there would be able to at least find the common necessities and amenities it is that they need to be able to live there comfortably. If you can understand and factor in these things into your analysis of the location, then you are much more sure of being able to get a more valued investment. I mean, I say this because these are things that I have worked with. These are things that I've taken note of. Over the period of almost a decade that I have been doing this, the real estate, of helping people to invest in real estate, these are things that I found that people naturally almost gravitate to when they want to go and take on a property. Remember, I've worked on both ends of the equation. I've worked with the investors, I've worked with the users. So I'm here and able to infuse all of that insight and all of that knowledge to be able to help my investors invest smarter. Places that people would look for would always be a winner with what it is that people need. Now, because there is also going to be quite a lot of demand, because of the number of people that are looking for property and the people that need a place to live, then sometimes these things are not always 100%. Because the person who's then going to be taking on the property will then be saying, oh, Lerato, but this is what I can afford right now. So I will manage and then I will move. Which brings us to point number 3, the economic viability of the people that you are going to serve. Now, the truth is, not everyone can live in the quiz of this world. Not everyone can afford to live in the VIs or the Lekki Phase 1s or the VGCs or the prime communities that exist in the society. people still have to be able to afford where they need to live, which means that the places in between would always have a market. Now, if you look at how much it is that people are able to pay versus what it is that properties are costing, you may also want to use that to find your own sweet spot. In business, we always feel like the most exclusive, the most premium offers, services, and opportunities are what make the most money. But if you are someone who then does not have so much of resources to be able to go premium and then do one or two, and you're considering how you can still make it work for you in the market, then you may want to come down in the market where you come to like where there's a larger demand, and then you multiply what it is that your interest or your investment is going to be. And I'll make a typical example. A 3-4 bedroom house in Lekki Phase 1, for example, you would be looking out for about 150 million. Now, if you were to take that 150 million, now this is assuming that you could even afford 150 million as an investor, and then you take 150 million and you break it down into bulks of 30 million. That gives you 5 apartments, which means that if you have 150 million and you are not looking to invest in just one property for whatever reason that may be, and you want to be able to do 5 units of apartments still at 150 million, you will not go to Lekki Phase 1. You would go to somewhere in between, maybe an Ologoro or maybe an Osapa or something, and then you would scale down on the size of the property that you're going to go into, and then you would invest there and you would still make your returns. But you see what has happened. You've used the indices of your research of knowing that there's a demand for the smaller apartments in areas like that to be able to locate your investment in such a way that you are also going to have the asset, which is the property, and you're also going to be able to meet the demand of the people. What is it that you're looking for as a property investor? You're looking for cash flow, you're looking for returns, you're looking for appreciation. What gives you all of these 3 things is the ability or the capacity of your property to be able to serve the needs of the people then. I hope we're following. I hope it's making sense. Drop a note in the comment and just let me know what it is that you're finding most important or most enlightening, and let's talk about it. If you have questions, remember to drop them also in the comments. And if you haven't subscribed already, please just take a minute and just click that subscribe button right beside the bottom of the video, and just click it, and then maybe even turn on post notifications so that you will be aware or you'll be alerted once a new video drops each and every week that is going to go on. And point number 4 brings us to the legal and regulatory component of your investments. Now, this is me talking about zoning. Certain areas are meant for certain things. Certain parts of the city or our areas are meant for, would always be zoned to a certain thing. So which is why even when you're doing your survey and you're thinking of going into a certain area, one of the biggest things that you need to be able to look out for would be this component, the legal and regulatory component. Legal in the sense that, is it valid? Is it legal? Are you getting it from a legal source? Is it a venture that is meant to be where it is? There have been a lot of instances, and I talk about this a lot in my due diligence video, which you can watch. I mean, also on the channel. After you watch this one, you can just look in the channel and you find it. Or I could add it into the show notes. I could add a link to it in the show notes so that you can easily access it and then you can go back to it. But before I digress too far, due diligence is one of the things that's going to tell you whether you are legally able or should invest in a place. So after you have done your due diligence on the area, another reason why it's important for you to think of due diligence in terms of your market research is that things that you'd be looking out for in this instance would now be, what type of structures is it that can be built in this area? What type of zoning laws apply in this area? Are you buying a property that is near where is supposed to be a school? Are you buying a property that is going to be near a farm? Are you buying a property near somewhere that's going to be meant for recreation, where the government is going to be able to maybe have just free or recreational or health facilities or anything? if you understand what is coming to the area that you want to go and invest in, then chances are that you will also be able to use that information to plan what it is that you're going to be able to build. When you have that information and you're able to use it to plan, you will know, one, whether it's something that you want to go ahead with. Two, it's something that's for you. Three, it's something that's going to be viable. And four, what are the preconditions that would help to make sure that that investment works? Typical example. We have had news of the Dangote refinery for over 10 years, and a lot of people have invested over the year, in anticipation of the Dangote refinery, of the industries that are going to come into the free trade zone, or all of that, right? And all of these people have had to pre-consider what it is that they need to come and do. We all know that the most basic need that all of this development and economic development is going to bring to the area is that people that are going to come and work there will need a place to live. So if you are also considering going into that area, these are things that you need to be able to look out for. In as much as you want to be able to go close to an industrial development area, you need to consider also what the land that you're buying or the location that you're buying into is zoned for. Is it zoned to be a free trade area, which means that if you also set up a business in that area, you're going to get additional perks. Example, the Lerato City. If you're going into a residential development, then are you sure that the land that you are buying into has been zoned for residential purposes? Are you going into an area where you are thinking of having both a residential and a semi-commercial investment on your property? Are you sure that you're going to be able to do that? Now, even for people who are buying into serviced estates, different parts or layouts in the estates would be marked for different things. There would always be the commercial end of it, there would be a residential end of it, there will be services end of it, and there may be a green area, there may be a play area, and all of that. You want to be able to be sure by law where it is that you are buying and investing into, so that you are not going to be acquiring a piece of property or real estate that you have a different plan for, and then you're going to be stuck at the point at which you're going to try and implement it. All of these factors essentially factor into what would be your strategy for building out your portfolio such that you are able to achieve the balance, the desired balance that it is that your portfolio needs to be able to thrive and serve you for the long term. And that wraps up the discussion for today. Please let me know what part that you found most enlightening or what it is that you have any questions about. You can drop them in the comments and I will be really happy to respond to you. But till next time when another video is going to drop, happy investing.